Hey guys, it's Terry and this is Invest Roundup. News about COVID-19 vaccines continues to excite the stock market. Market sentiments and business prospects have reacted upon the announcement of this news, especially when it was confirmed that Pfizer's vaccine is 95% effective in its final trial. Some experts, however, are not too keen and seem to think that this could have an adverse effect on the stock market. Western Europe and the US continue to record increasing numbers of COVID-19 cases, and countries are going to lockdown once again. The US elections are still making headlines as protests pop up around the country in response to the election results and injecting even more volatility into some of the industries. So, let's dive into this week's news. Disclaimer: whatever stock or news we talk about is not a recommendation to buy or to sell. These are all just news we deem important, things we think you need to know about if you're invested in the stock market or if you intend to invest. First news item: after Pfizer comes Moderna. Pfizer gave the world a pleasant surprise 2 weeks ago when they announced they found a vaccine for COVID-19 that's been proven to be 90% effective. Just 1 week after though, American BioTech company Moderna hightailed it with a discovery of their own by announcing their very own COVID-19 vaccine with 94.5% effectiveness and causing their shares to jump significantly. US top infectious disease doctor Dr. Anthony Fauci was even quoted saying that these are very exciting results. For the vaccine to be 94.5% effective is truly outstanding. This news, of course, caused share prices to react, with the Dow jumping 470 points to an all-time high. Stocks that would benefit from the economy reopening, like United Airlines, led the way with a 5.2% increase, not surprising considering travel would be in the horizons again after the vaccine is distributed. Contrastingly, shares of companies that have thrived during the pandemic, like Netflix and Amazon, lagged behind. Experts were, however, optimistic when interviewed by CNBC, sharing that the economy could be poised for pretty strong growth in 2021 relative to 2020. Of course, the more important thing is to first have the vaccine distributed, as we are not going to be able to get back to the economy we want until a large part of the population is vaccinated. This positive outlook did not stay too long on the stock market because by Friday, stocks ended lower as more and more news about COVID restrictions across different countries start to pop up, especially in the US cities and states, threatening business activities. There was also a dispute between the US Treasury and Federal Reserve over the country's emergency lending programs, which have caused people to be divided. Former hedge fund manager and co-founder of TheStreet.com, Jim Cramer, was even quoted telling investors to avoid vaccine stocks, mainly because no one is going to make any money off of this vaccine, which will not contribute much to the bottom line anyway. Looking at Moderna's profitability over the past few years, he might have a point. All in all, in November, stocks have rallied as the post-COVID era becomes a possible reality for year 2021. However, short-term apprehension can still be expected as COVID-19 cases are still on the rise at an alarming rate. Second news item: Walmart surprised everyone with higher-than-expected earnings. American multinational retail corporation Walmart, famous for their supermarket chains, gave everyone a pleasant surprise when it announced their earnings last week. The raging pandemic, which have driven people off the streets and the shopping aisles, have instead driven the same customers to shop online. Walmart's US e-commerce sales have soared 79% in the third quarter as customers continue to shop online during the coronavirus pandemic and actively shipping purchases to their homes even for the upcoming holiday season. Walmart CEO Doug McMillon also said that they foresee these new customer behaviors to persist and that the corporation is well positioned to serve their customers beyond the pandemic. The company's stock has gained nearly 26% so far this year, and the price reached an all-time high of $153.40 last Monday. Total revenue grew by 5.2% to $134.7 billion from $128 billion last year, which exceeded the Wall Street's expectation of $132.2 billion. In the last 7 weeks, Walmart has sold 3 long-time overseas holdings, all with some form of losses. They recently threw in the towel in Japan after 18 years and sold most of its stake in the local supermarket chain. In October, they agreed to sell Asda Group Limited in the UK to a private investment group. But this comes as no surprise because they did emphasize back in 2018 that they are looking to withdraw from struggling international operations and focus on higher growth e-commerce opportunities. This was made evident with the recent feat of delivering at-home coronavirus test kits to people's homes using drones in New York and Texas in the US. Former hedge fund manager Jim Cramer, however, seems to think that the discovery of the vaccines is a headwind for Walmart and fellow retailer Home Depot. According to Cramer, there's no way Home Depot or Walmart can keep delivering this kind of growth once the world goes back to normal, as online purchases will become less attractive without the stay-at-home economy then. At the moment, Walmart is considered to be a medium-risk investment. By the way, before we go on to the next news item, click on the subscribe button below now so you'll be informed the next time we upload a new episode. That way, you won't miss any important market news. Third news item: EV stocks are in! Electric vehicles or EV stocks have been experiencing fueled growth in the last week. Shares of electric vehicle makers are up about 30% on average last week. Tesla, which was the top dog in the industry, now finds itself competing with a number of major industry competitors. Lordstown's Motors shares, for instance, are up almost 50%. Nikola shares was up about 22%, while Chinese EV maker XPeng or XPeng is seeing 27% increase in the share price. In fact, 6 of the 15 EV stocks have hit a new 52-week highs over the past 7 days. The question is, why is this happening? No one knows exactly what was the catalyst that triggered this sudden spike, but there are a few theories. For instance, it was recently revealed that Tesla will soon be included in the S&P 500 index. This could have sparked interest in the industry and caused investors to want in. Basically, the FOMO factor. Another reason could also be the merger agreement between Special Purpose Acquisition Company CIIC merger with UK-based EV player Arrival this week. CIIC shares are up approximately 60% since the deal was announced. In any case, the industry earnings and sentiments have been looking good recently. NIO, for example, one of the 3 US-listed Chinese EV makers, earned more than Wall Street expected and offered encouraging financial forecasts. General Motors announced that it would want to sell 1 million EVs by 2025. But beware, great returns come with risks. Even though early action takers who bought into the industry long ago and had gotten 560% to 2000% returns by now, it is worth noting that EV stocks can actually be really volatile, just like penny stocks, and carry greater amounts of risk. In any case, last week, Yahoo Finance and Barron's each have detailed EV stocks that we should be watching right now due to this sudden spike and which one we could benefit from. Should the industry take off in the future, however, we can expect oil prices to take one serious hit. Finally, our last news item. The heat is on between the Fed and Treasury. The courtroom drama between the US Fed and Treasury is simmering and it is impacting the stock market. The election saga between Donald Trump and Joe Biden was just barely over, and to be completely honest, far from over. But now another issue is making headlines in the country. The Fed and the Treasury can't seem to see eye to eye about the use of the country's Federal Reserve funds, and this conflict has offset the positive sentiments from the vaccine distribution in the US. Long story short, Treasury Secretary Steven Mnuchin has sought a 90-day extension for 4 of the central bank's emergency lending programs, while requesting 5 other programs expire on schedule on December 31st. On top of requesting the Fed to return unused funds so the Congress can reappropriate $455 billion, quoting more economic support. The Fed, however, is not agreeable and asserts that it would prefer that the full suite of emergency facilities established during the coronavirus pandemic continue to serve their important role as a backstop for our still strained and vulnerable economy. Removing some of the emergency programs may leave the economy vulnerable as President-elect Joe Biden prepares to take office in January 2021. Some experts were commenting that the Treasury should be shoring up the storm wall of these facilities, while Oxford Economics called this a rare and poorly timed public quarrel. This back and forth between the two parties have caused US stocks to slide on Thursday, even though both Pfizer and BioTech gained since the announcement. The healthcare sector performed better than the broader index as Pfizer seeks emergency use authorization for its COVID-19 vaccine. Indexes, however, began to decline with the S&P 500 futures slipping 0.7%, while the Dow futures fell 0.6%. Investor sentiment has also been affected when data showed COVID-19 hospitalizations across the United States jumped by nearly 50% in the last 2 weeks. Those are the 4 important investment news we had to share with you this week. Once again, we encourage you to get more information if you'd like to act on any of the companies we've shared about earlier. Comment below and tell us what you'd like to see in the next Invest Roundup, and share this video with your friends, especially those who are invested in the stock market. See you again soon!